So I have to start by asking you about politics. We've got another Democratic presidential debate scheduled for tonight. Healthcare is always a main topic and a main target. And stocks can get kind of choppy with all of the talk about Medicare for All. You've said before you don't think Medicare for All is the right way to go. But what are you expecting in the outcome of the presidential election and how consequential it is to your business?
So we think at the core of our business, we're a health service company. We're a global health service company. And the most important thing we do every day is to try to help our customers, all 165 million of them around the world, live healthier, productive, vibrant lives. A big part of that is making healthcare more affordable and predictable. So we think with the outcome of any dimension of the election, affordability, improved predictability at the individual level, and then working to simplify programs is going to be mission critical under any dimension of what manifests itself politically. And we've positioned our company to continue to drive toward that. For example, we launched a one-of-its-kind program this past year for insulin-dependent diabetics that essentially makes it affordable, predictable, and simple with a simple $25 financial obligation for an individual for a 30-day supply. That's a dimension of what we think plays in 2019, 2020, 2021 going forward.
What kinds of conversations are you having with investors here at the conference about managing through that kind of volatility and choppiness you see in stocks? I think we've got a chart comparing health insurer stocks to the odds of Bernie Sanders, who's been rising in the polls and who is focused obviously on Medicare for All. So how does that affect your conversations here?
Sure. I think there's two dimensions to it. First, you put it into context. For example, as a company, we've delivered in excess of 40% TSR over the last 10 years on average. So when you look at the longevity of that over an environment coming out of the financial recession, going through the ACA, dealing with geopolitical environments, dealing with changes in the environment, 40% TSR on average over an elongated period of time. The conversations, you have the short-term dynamic of what might a legislative disruptive environment do to business models. As a company, we've built a business to actually be quite durable. We serve commercial clients, we serve health plans, we serve governmental entities, and we serve physicians and hospitals. So we have a model that is quite flexible. Two, reminding them that we've built a very capital-friendly, capital-light model, meaning a lot of our capital is not encumbered in a hardened way, it's fluid and dynamic. For example, we'll produce in excess of $8.5 billion of operating cash flow in 2021. So we remind them of the strategic flexibility we have, the fluidity we have to serve multiple stakeholders to create value, and a proven track record over a prolonged period of time, in this case, a decade with 40% TSR on average.
The focus of the current administration, part of it has been on the middlemen. And you acquired Express Scripts, the largest formerly freestanding pharmacy benefits manager. And they were focused on changing the rebate model for drugs, those discounts paid on drugs. That didn't work. They pulled it back. But do you expect continued pressure from this administration on that issue?
So we think the basic tenet, back to the pressure from this administration or otherwise, they're all forces that are pushing for, back to what we talked about before. How can we improve affordability for the individual, for the 330 million Americans every day that are looking to minimize cost, maximize quality, and importantly, avoid surprises? So how do we avoid those surprises? If you take Express Scripts, they are one of the largest pharmacy benefit service companies, coordinating care, working with pharmaceutical manufacturers and working with physicians. They've delivered, essentially, now we've delivered the lowest pharmacy trend in the industry right now, close to zero, so close to a 0% increase. And when you look at any one item like a rebate or otherwise, those are tools that the industry have used, typically at the direction and discretion and coordination with employers, other health plans, and otherwise. So we agree with the macro tenet, reduce the overall cost prudently, create better predictability for the individual. That's mission critical. Sometimes if the aggregate bucket moves but it doesn't show up at the individual level and creates volatility, that's a failure. We agree with that. No one dimension, be it rebates or otherwise, affects our business model in a draconian way. And we have a fluidity to our business model. As we see right now, it's growing tremendously. And our clients are staying with us, and they're expanding relationships with us as we sit here right now.
Well, we've been talking with a lot of drug industry CEOs here at the conference, including Eli Lilly and Gilead yesterday. And when we asked them about the accessibility of their medicines, they focus on you guys, and they say the system's not working. When you do see those big copays sometimes, the exposure of patients to their drug prices, does something in your system need to change to help fix that? Or is it the drug companies who need to lower their prices?
Yeah, I think when you have this conversation, you need to kind of rise up above it. And I think all of us need to avoid the temptation of pointing at any one party. That's not constructive. This is all about people. How do we help individuals, first and foremost, stay healthy, lower their health risks, example. There are tens of millions of individuals who are pre-diabetic in the United States today. They will become diabetic within a few years. How do we help them avoid becoming diabetic in the first place? Through lifestyle management, through diet, through physical activity, and sometimes through supporting medications. How do we align incentives around that? There is no one party in a $3.5 trillion industry that is the cause of all good or all bad. And we do not think that actually pointing a finger is a constructive way. Now, back to the most important thing is how do you work with the practicing physicians to get, in this case, the right service to the right patient, coordinate it the right way. We're proud of the fact that we lead the industry in value-based care programs with physicians, specialty physicians, hospitals, and increasingly with pharmaceutical manufacturers to reward based on the clinical outcomes, not the volume of consumption. So my point is, I put up a little bit of a wall to that dialogue because it's more complex than that. And what we need to do is put the individual front and center, like the patient assurance program, and provide them peace of mind, predictability, and coordinated care at a level that they tell us is a value, not the rhetoric up at this level, and then work together to create more value, because that's our job. Our job is to create the value for those who are consuming the services and coordinate the care with the practicing physicians, and that's what our company is built to do.